So I'm going to share my screen here. Today I'm going to talk about a little history lesson for us on how our money caused the economic crisis. So, see someone in there in the background. So a lot of people think that the virus is the cause of the crisis here. And, certainly it's the most proximate cause. But one needs to look at the history of the situation and kind of notice that there's a giant bubble that we've been enduring with a lot of overspending and debt. So governments, businesses, consumers, they've been collecting tons and tons of debt over time. And that's as a result of the declining purchasing power of the currencies. So that here's a chart of the dollar. Way back 100 until 2011. And you can see that it's fallen 97% from 1900. Now, we'll just take a few pieces of this chart. You look at 1913 here. This is a little bump in the value of the dollar. From there, that's when the Federal Reserve was created. Okay, so the Central Bank of the United States was created in 1913, and from there it really, just collapsed in the 1920s.
No, I'm sorry to interrupt. Are you trying to share your screen now?
Oh, you can't see it?
No, I don't. It's just me or others too.
Gotcha. Okay. This is the first time I've shared on here. Let me see.
You should press share screen button, the green one on the bottom. On the Zoom. Yeah.
Gotcha. Let's see.
Sorry to interrupt.
Can you see me now? The screen? All right, good. Let's go back to the beginning then. All right, there's the beginning. There's my name. How our money caused the economic crisis. So the dollar is the bubble, and the virus is just the pin. We have a gigantic amount of debt due to this dollar losing value, and this is the chart I was just talking about. So let me just talk through this chart a little bit. You can see here that this goes back to 1900. But 1913, the Federal Reserve was created, and there was a significant downdraft in the value of the dollar from about, at the time it was 82 cents on the dollar in this, and then went down to 40 cents on the dollar, or 40 cents. But it's this printing of money that causes the dollar to lose value. And so we had a big run up in debt and a loss in purchasing power of the currency until 1932. It rose up, and then from there we pretty much had a down all the way down until 2000. Until today. This only goes until about 2011. So the reason for that, we can talk through this chart a little bit here. So you can see this is a chart of productivity in the United States. You can kind of extrapolate this to other parts of the world, but the dollar has been the reserve currency of the world since 1945, when there's a agreement called the Bretton Woods Agreement, where the U.S. had 95% of the world's gold through trade in the 1800s and early 1900s. The U.S. was very productive, and they created a lot of goods and services and sent them abroad, and people sent gold to the U.S. So by the time World War II completed, it was 95% of the world's gold was in the U.S. And so the world powers got together and said, okay, let's since you guys have 95% of the world's gold, let's just back the dollar with gold and say, okay, all the other currencies will be tied to the dollar at a certain rate, and good deal. So if you had dollars, you could just turn them into the US Treasury, and they give you, if you had $35, they give you an ounce of gold. Well, that was, it worked for a while. You see from 1948 until 1971, productivity, the currency held its value, and wages rose as well. So workers were able to kind of, their wages rose with productivity. They get their piece of productivity. But that the currency divorced in 1971 because in the 60s, the U.S. Took advantage of this reserve currency status that they had, and were able to spend all kinds of money on all kinds of things, and borrowed money to go to the moon, create all kinds of new welfare programs, Medicare, Medicaid. Social Security was in the 30s, so that's another, all kinds of spending. The Great Society, all kinds of things. And so pretty soon, France and Germany just decided, and a number of other countries with lent money to the US decided, hey, I don't think you guys have enough gold. So they started calling in the debts. And by the time 1971 came, Nixon, who was the president at the time, said, hey, I know we promised, but we're going to default on this promise. You guys said we said we're going to give you an ounce of gold if you have $35. Well, you can keep your dollars, but you're not going to get the gold. And at that point, the whole world should have gone on their own gold standard, but they didn't. They kept using the dollar. And so that was really an exorbitant privilege that gave the US Federal Reserve the ability to just print money at will to finance vastly more government spending from 1971 forward. And the problem with that, of course, is that if you can print all this money, it doesn't go to workers anymore because wages become less valuable, savings become less valuable. And so the productivity continued because technology continued, but much more of that value didn't go to wages. It went to capital owners, to people that owned assets, stocks, bonds, real estate. So those prices have gone up significantly, and who owns those things is rich people, people who have assets or benefit from asset prices rising. So you can see here, this is the chart of the rate that the Fed funds rate, which is the rate that the Fed sets for banks to charge interest to each other. It's a kind of the base rate. So 1971, right here, I don't know if you can see my cursor moving over here, but right here, the currency was falling. I think oil went from $3 a barrel to $30 a barrel. It wasn't because of Iran, it wasn't because of the Middle East. It was because the dollar was losing value because it divorced from gold. I think the gold went from $35 an ounce to $900 an ounce. The Japanese yen went up about 10 times as well, and the German mark at the time. So the dollar was just losing value. And so there was a significant move from inflation, or the significant move from a stable currency to a currency that was losing lots of value. To save the dollar, because it was really running out of control, in 1981, the Fed raised interest rates all the way to 21%, and that was to save the dollar. And luckily there was a lot less debt at the time than there is today, so it didn't just completely collapse the economy. It did for a year, but it saved the value of the dollar, and it restored confidence in the currency. So you can see from then, though, from that point, we've just basically down, and every time there's been a crisis, here's the 1999, 2000 NASDAQ bubble. When that bubble burst, the Fed just cut interest rates down to 1%, and that was historically just like insane. We've never seen a 1% rate, at least in 45 years. And then, that default cycle wasn't allowed to just happen. So that's the thing. It's like, if there's all this debt, it just needs to be liquidated because it's been invested in the wrong places. But the Fed didn't allow that to happen, so they printed up all this money, and the money, instead of staying in in the stock market now moved into the real estate market. So the low rates, the 1% rate, and then they kind of slowly raised it, caused house prices to go crazy. And we had this, everyone remembers this, the housing bubble in 2008. That collapsed because all the extra debt was overbearing. So that collapsed, and then they didn't allow it to collapse. Of course, the banks were about to go under, and it was people were going to lose their deposits in the banks, and that's not politically feasible. So they cut the rate to zero, and that's so you can see it's just like down, 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 and at some point you reach zero, and now we have this new downturn, and now we're at zero again. I mean, where do you go from here next time there's a crisis? Well, it's a good question. And you can see this is a chart of the history of the U.S. stock market priced in gold rather than in dollars. So remember, we're on a gold standard until 1971 in various forms. So it peaked, the Dow to gold ratio in this is 1929 in there was a big run up in stocks in the 20s. It's called the Roaring 20s, and people were going crazy, borrowing on margin to buy stocks. And so stocks went up, in terms of gold, because the gold was the stable measure of the dollar. It reached almost 20 times. So you could buy the Dow Jones for 20 ounces of gold. And then it collapsed in the Great Depression, down to almost 1 in 1932. Then it ran up again in 1965. It reached a high of about 28 times. And then you can see it kind of started drifting down until 1971. It collapsed. So after we went off the gold standard, gold rose a huge amount in value and versus the stock market. And so it went all the way down to 1 to 1. So you could buy 1 ounce of gold. You could buy the Dow for 1 ounce of gold in 1980, and that's when here they raised the federal funds rate up to 20%. So from then, now that the currency was restored, the confidence in the currency was restored. We had a big run up. The stock market's gone crazy. It went crazy from 1 in terms of gold in 1980 up to 1999, 2000. At the end of the dot-com bubble, it reached a high, all-time high, over 40. And my bet is that we're going to go back all the way down to 1. So if you're kind of, I don't know if you're investing your money, you're thinking, I don't know if the stock market is going to continue crashing from where it did a month ago, or if it's going to continue up or go up with all this new printing of money. I just think you buy gold, because either way, the stock market is going to fall, not necessarily in dollars, although it could, but it's going to fall in terms of gold. So we have all this debt, and the productivity, the money printing, the productivity that's created through technology can go to capital owners or to wage earners, and so much more of it has gone to capital owners than wage earners over the last 50 years. That everyone complains about having a lot of inequality, and that's the reason. I think it's quite it's striking how little often people seem to recognize the reason for the inequality. I think it's because of capitalism, but it's actually because of central planners of the price of money. And that's not a capitalist concept. That's a socialist concept, or a central planner concept. So what we need is, in my opinion, we need less central planning and more capitalism, because capitalism is what caused until 1971 allowed people to get ahead. Their wages rose, the currencies holds its value. So there's gold, and the gold's been around for a long time, but crypto is a new one, and there's a lot of presentations on the Young Conference about crypto, and I think crypto is quite fascinating, and maybe the way forward technologically. It's just only 10, 11 years old, so but it allows for people to own the money rather than government to manipulate the money and cut interest rates for political reasons and for short-term reasons and pump up the debt even more and more and more. So what we're witnessing today, to kind of conclude and kind of just anyone wants to talk, ask some questions or discussion, is that we have this giant bubble in not only debt, but the currency, because the debt, because the cheap currency is what allow people to take on so much debt. If you have low interest rates, it causes people to be able to borrow. But you wouldn't have those low interest rates but for a central planner of the a price fixer. So yes, we have this virus, but it was just a bubble looking for a pin. And we got this virus comes along, a gigantic pin, air starts flowing out of the bubble. And on the other hand, you got the central banks trying to blow air into the bubble. And so the bubble doesn't know if it wants to be bigger or smaller right now, but it's kind of like, it's in its transition state. But the next leg down, we're going to have, even if the virus is resolved soon and people, quote unquote, go back to normal, go back to work. There's been so much malinvestment to this point that, the deleveraging just is going to continue happening regardless of the pin is still there. That's my take on it. So, anybody have any questions?
Yeah, I have a question. Joe, did I hear correct that you said that capitalism is actually a solution? We need more capitalism. Did you say that? Or
yes, I think so, because go ahead.
Yeah, it's just I will rephrase the question. So, do you understand correct that you think that money-driven economy is the solution?
Well, yeah. So I should have started with this. So you think about people producing, which is the base of an economy. You go, you produce things, and now other people, either you can use them or other people can use them. If you consume it, then it's gone. But if you don't consume in the short term, and then you save, those savings are available to finance other people's investment in other people's their ventures or whatever they want to borrow money for. So you got the store of savings, and you got people that want to borrow money, and so that that interplay between savings and debt represents a price. You get an interest rate, but the price has been so manipulated by a third party that came in between and said, okay, this is the currency you guys have to use, and then also that the rate's going to be allowed, because we don't have a lot of savings now. We have a ton of debt, but so rates should be high, but they're low because you put a central planner picking an interest rate. And why did they pick one that was so low? Well, it's because people that are in office right now, they're only there for 4 years or 2 years, and they want to be reelected. No one wants to have a crisis on their watch. So they just, they cut the rate in the short term to keep people in office. So yeah, go ahead.
Kind of like if you're saying that Federal Reserve took all the money from people, and that was the beginning of the global crisis, economical crisis. But now, actually, and you talk about given through capitalism, given power, economical power back to people, right? But isn't it what happens now? People who represent global corporations, who has all the power now, not even in most cases, not even in government hands, but in global corporations. And if we will bring more capitalism, it will be more greed that will produce more such corporations. And I don't see the ways how people who not manage this corporation, who not in the highest position of these corporations will receive their power back through the same approach.
You're right. Okay, so if I understand your question, you're saying that there's going to be more control by companies over the society, or by people who are already wealthy.
Yeah, the greed that comes along with capitalism, it's just my opinion. I think that's the reason of all the problems, that people are greedy and wants money wants some physical thing like money is on the top of motivations, as it happens with capitalism. It's less likely to change anything.
Sure. I mean, so I think that, you know, the root cause of the problem with people being self-interested or greedy is having an agent of force in the society, having the power to be given out, to be auctioned to people that finance campaigns, that you know, friends in regulatory places. It's the having of government power to be divvied out, rather than having people that, you know, I mean, I used to say before Donald Trump was anywhere close to the presidency that no one likes that guy. But the only things he can do with all his money would be get more money. And the only way he could do that, unless he got control of the government, you know, which of course now he does, but for a long time he didn't, was either create hotels that people wanted to stay in and work at versus the other places that they could stay in or work at. And he'd offer them a better deal, you know. But if you have this, like, you know, very powerful, or he can give the money away. So you can do one of two things: either try to make more money or do something that's, like, you know, we all recognize as altruistic and kind. So, but he can't force anyone to do anything unless there's government power to be auctioned off and to be used. So it's the absence of capitalism when you have governments or when you have corporations in control of government. I think people think of that as capitalism because there are companies, but it's, you know, the more capitalism you have, the more freedom you have, the less centralized control. Ariel, you're raising your hand. I'm sorry, Ariel. But you're on mute. No?
Yes. Hi guys. How are you? I want to add something to your conversation. I believe that you both have, like, different definitions on what capitalism is. There's the classical definition, which is like accumulating capital, and like the resources are in private hands. And the other is the system in which human interaction is voluntary. So there's like a definition of capitalism, which is like, if I deal with you and you deal with me, and it's both, the agreement is on voluntary terms, like, that's capitalism. I don't know if you, Joe, have heard of that. So, like, let's say we have like a hippie community that wishes to don't use money, but it's all voluntary, right? They all do it because they want. For some people, for some philosophers, that would be like the same as a voluntary capitalist society, because they are not using money because they want to, right? Whereas the system we live in right now, the one that Joe spoke about, the money, it's about money controlled by the government, and they destroy the money. And money is the half of every transaction. Like everything that you do, it's controlled by the government. Like they destroy through inflation, they manipulate the interest rates. So how can we say that we are living in a capitalist society when everything is controlled from above, from the government, right? Like a true capitalist society would be like one that uses gold or one that uses Bitcoin, right?
Yeah.
That's like true capitalism.
I mean, it certainly would be. I'm sorry for interrupting. It
What do you
wouldn't,
think?
I mean, it wouldn't be the only aspect, of course, of a free society. But yeah, I mean, in the realm of money, you wouldn't have a currency that's just enforced by the barrel of a gun, or you know, if you don't use this currency, you go to prison. It would just be a market-created currency, and where people use it voluntarily, right? Whether it's Bitcoin, gold, or I mean, people have tried all kinds of things over time. They tried seashells, cows. You know, in prison, people use cigarettes. It's just a naturally occurring phenomenon when people, you know, they need, we all need to eat. We need, you know, places to stay. We, you know, we have demands. We have things we need. And so it's hard to kind of, I need 2 bushels of wheat, or I need some burger. And you only have some hoeing services and a broom. You know, that's not what I need. So the barter doesn't work very well. So it's just you have this medium of exchange that develops. So,
Right.
but it's a naturally occurring phenomenon rather than something that's top down, which is exactly what you said earlier. So I think I agree. But Nika, does that? What's your thought on that? Does it make sense?
We are just on the different pages, different page on this, because I think at the core of the issue, money producing money without, like for example, like stock markets or whatever, without actual. It's bad. It's just bad for economy. It's bad for people when rich people becoming richer. And I think there are so many other ways to maintain economy. There are shared economy, there is circular economy, there is this and this, there are exchange economy, there is Burning Man. I don't know if you've been
That's
there.
voluntary. Burning
Yeah,
Man is voluntary.
yeah, and it's a trust. I know it might sound crazy, especially on the talk with all the schemes and all the numbers, but sometimes if you trust, you receive what you need and you meet person who can give you what you need. But we don't trust yet. We're not there yet, of course, and there should be some link to switch to this. But I don't think this link should include some old rules that brought us here. But it's just my opinion. I'm, of course, not an expert.
It shouldn't include some old. I didn't understand the last part.
When the money is in spotlight, when it's the main driven idea. Like for example, if idea of improving the situation would be in the spotlight, if it would be the main driven power in business or NGO, anything, if it would be the main driven power, we would have now electromagnetic cars that like don't need any like energy or whatnot. We would have this and that. And why the progress is slowed down? Why we don't have this now? Because corporations who built on oil, on gas, and being from Russia say all this. Probably it's not like, hope no one see me now. But those corporations that already have this stable income from these sources, they of course will slow down the progress. And that's one of the other side of capitalism. Of course, they were driven by money. They wasn't driven by idea or the progress or how we can help people. Like I don't know if you saw this issue of Drunk History of Duncan Trussell, where he shows how Tesla, when he speak about free electromagnetic currency, how it appeared and how people were people. You saw this, right? When people were people who were in charge of like making decisions decided to not invest in this way of getting electricity because it's like, since it could be free for everyone, like why would we support this? So and it was blackmail, not blackmailed, but it was turned all the other way, and people would think, yeah, probably it's bad for us. And that's what I think, what the other side of the capitalism, that it slowed down the progress. It doesn't think about people in the spotlight.
Well, all right, fair enough. I mean, to me, it's maybe the word money is, we're getting hung up on that because it's not. it's not about money. It's more, it's about production. Like we want to produce like more efficiently. We want to have cleaner energy, cheaper energy, like you're talking about with that example. By the way, I'm not sure if that's actually true. I mean, I saw that documentary, and I looked around to see if free energy was available, and I mean, I don't know. I'm not entirely convinced, but anyways, it's possible that it could be buried. But in any case, the freer the society, usually, all through history, that the more we have technological progress, we have more abundance for people getting out of poverty. Whereas you can see on this chart here in 1971 that we introduced a whole bunch of socialism, and now people that their wages went down and richer.
It wasn't the naturally emerged ideology. It was the same assigned ideology, and people think, okay, now we're doing this. Okay, no, now we're doing this. And the winner is the one who put out the most propaganda in the world. And this ideology wins. So socialism, capitalism, it's all kind of assigned ideologies, when I think the true system on which we will be existence will emerge naturally. I don't think human brain can think right away and establish the right thing. But it's good that we have all these conversations with all the opinions to come together and just help this emerge faster. It's just great.
Freely, we're having a free discussion. It's not controlled by the central bank.
Yeah, like a free market. Can I just add something quickly?
We have 1 minute left.
Yeah, can I just add something quickly? It was interesting listening to that discussion, because for me, there's elements of truth in both of it. The way that we use words, they mean different things to different people, and particularly words like capitalism. Like Ariel was saying, people often use that word meaning different things. And yeah, it's supposed to be about free markets, but we've never really had free markets. And corporatism is what we've had rather than capitalism for a long time. Which is why we're now in a situation where the corporations often have more power than the government. But an important distinction for me that I came across in recent years was around the word economics. And actually, when we talk about economics, what we're talking about is crematistics, which is like around wealth and money. So when we hear economics, we automatically think about money. But economics, the origin of the word economics means management of home, and it's connected to the word ecology. So ecology is the study of the home, the learning about the home, and economy is the management of the home. But we often think of it as purely in terms of the money and what we do with the money, whereas when you manage your home, literally the money is one small aspect of how you manage your home and your household. So if you look at your home on a community level or a national level or an international level, there's so much more which comes into the management of it than just the monetary aspect. But somewhere along the way, we've lost that, and all of our focus is around what the money is doing, what the markets are doing. And then we've tied everything to those markets. So pensions are tied to markets, to the stock markets. Everything's measured in GDP, and GDP needs to always go up. And GDP goes up even when bad things happen. So something bad happens in your country, it produces more flow of money, and therefore your GDP goes up. So it's a good thing. So interestingly, some of the examples that Nika was giving, I'm interested in alternatives to GDP, how we measure the well-being of societies. And so like gross national happiness as an alternative marker.
Well, we're already over by a minute, so I want to get over on this person. But just on that one point, I think the GDP just measures the amount of spending, and it doesn't measure, happiness or anything like that. So, and a lot of it doesn't take into account debt. So if you borrow to do all the spending, it just creates a huge bubble. So if you're just focused on GDP growth, you're actually going to get a huge GDP collapse afterwards because you're pushing it down the road. But anyways, thank you for the discussion, everyone. I think Alexander is next.
Thank you.
Thank you.
I don't know if he's here.
Should we carry on?
I guess I just assumed he was here. All right.
Oh, wait, one thing I've always wondered is who is all that money owed to?
Yeah, well, I mean, I was focused on the U.S. because the U.S. is the reserve currency, but I mean, you know, a lot of these countries have debt, and not outside the U.S. A lot of people have borrowed in dollars, you know, so they can't print those dollars, so then they print up their money to get the dollars, and that's what collapses like Brazil and Turkey, and we've experienced like massive hyperinflations in a variety of countries, and Russia had a big collapse in the currency a couple of years ago. I think it went down 50% a day. So, but you know, it's coming for the dollar. The dollar is not immune from all that. It's just, you know, but in the U.S. case, like the debt is owed to, you know, China, to Japan. People have been taking the dollars even after they took away the, Argentina. It's another one. I mean, all around the world, really. And then we're all going to go through it now. It's a worldwide thing. The dollar was backing it before, but you know, we're all following the same playbook now. Just print up a lot of cash and try to save off problems. But you just kick the can down the road, and now we're caught up to the can, and you know, buy some Bitcoin or gold or something. Make sure you got. Oh, we got questions in the chat. Oh, yeah. There's a lot of questions. I didn't see that. Alexander, whenever you come, just take it from me here. It's fine. Okay. What's the other technology? Oh, this is a while. Okay.
No, I don't
Right.
think you said.
Oh, were you muted, Ariel? Sorry about that. Because of me? Explain this chart again, please. Productivity. Ah, sure. Senia. Okay. Let's see.
Yes, I happen to have all the currencies that we have, like the oldest one, and we've been through the 5 different currencies. It's a mess, and we are devaluing like crazy in Argentina right now. It's like a few days ago, you needed 100 pesos for a dollar, and right now it's 130, and it's like growing every day. It's going crazy.
Yeah, it is crazy. Here in Bali, it's you know, the first time I came here 5 years ago, it was like 10,000 to the dollar, and now it's like 16,000. So it lost 60% of its value, in a few years. Versus
we lost that in a few days.
No, in a few years, but the dollar's lost value too, so it's lost even more. It's just, you know, relative to what we want to buy, what we need, what people need. You know, it's just like the currency's losing value. So this productivity chart, can you guys still see it? No. Yeah. We're back on. Yesenia, can you guys see this chart?
Yep.
Okay. So productivity just is, I mean, this is it's a measurement of how much we produce. Now, I know, like, especially I mean, here in Bali, if you hear production, you think we have too much stuff and all this, but we want abundance. Abundance is a good word, and producing things is maybe bad, or I don't know, but the more we produce for the amount of effort we put in. So it's tried to be measured in the amount of produced per hour of work that humans have to do. So if we can automate things, if we can have, you know, all the food and organic, hydroponic, you know, healthy food and shelter and clothing, if we can all do those, if robots, or not even robots, if 3D printers can just do it, we don't have to employ anyone in sweatshops, and that would be the ideal. If just everything was free, and that's the end goal of an economy, is to have everything essentially, all our needs met, and we open up our time and we're able to pursue that which we want to do. So productivity, that's what that is. technology is what causes productivity to go from bottom left to the top right of that chart there. And the hourly compensation thing is, it just kept up with it when the currency was tied to gold, which is something relatively stable. And then when it was taken off of gold, it really just stagnated, whereas productivity kept going. And all that extra value was stolen essentially from people that were working, and went to asset owners. If that makes sense. Are you on mute there, Cassini? I couldn't really hear you. I can see you talking.
Yeah, hi.
Oh, there you are.
Yeah, I got that now. It makes sense. So what happened in 1980? The gold, what happened? Why did this happen? The productivity and hourly compensation started to go in, you know, completely different directions.
Yeah. Since World War II, U.S. had all this gold, and they got together and said, "All right, you guys have all this gold, so we're gonna take all the world's currencies and back them with the dollar. So there'll be a certain ratio if you turn them into the German marks to the dollar or the ruble or whatever it was.
Mm-hmm.
And within the dollar was backed by gold. So okay, $35, you can bring it to the U.S. government and they give you an ounce of gold." But they started spending so much, the U.S. government started spending so much that they didn't have enough gold to finance it. So they were borrowing from the rest of the world, that people were loaning the U.S. government money. And then they just had too much debt. So Germany and France, the governments, they said, "Hey, we don't have enough gold. We want actually for you to send us the gold." So the gold started flowing out. So it went from 95% down to about 45% of the world's gold. It was just flowing out super fast. And to stop that from happening, the president at the time, U.S. President Nixon, said, "Okay, you guys, we're not gonna give you any more gold. We're just gonna default on our promise to do that. And so you can hold the dollars that you have out there if you want, but you can't come back and get gold for them."
Mm.
So then the currency was just free floating, and they could just print as many dollars as they wanted. The U.S. government could, and just spend at will on all kinds of things, wars in the 80s, and basically since then, I mean, all kinds of bloated nonsense, CIA, and all kinds of domestic things as well. So, but they don't even have to tax people to do it. They just print up the money to do it. And eventually, of course, the currency collapses if you just print up money and spend it. That's why.
Great. Thank you. Thanks.
Anyone else have anything like to discuss? Look at the chat. Jack. Increase relying on the USD. Right. Jack Learn, you there? Yeah. You're still on there. You're saying that countries start to decrease relying on the US dollar. That's true, and that's why, the reserve currency status is going to be taken away. It's an exorbitant privilege that people have bestowed on the US. It's not really, certainly not deserved anymore. We're sort of relying on this old system and people continue to take the dollars when they print them up. But China and as you, I mean, China's making deals with other countries, with Russia, and they're making all kinds of deals to get out of using the dollar between themselves. They're just cutting it out, and that'll hasten the decline and the demise of the dollar ultimately.
Have you heard about some projects like there are so many, like the seeds, for example? Have you heard about this?
Yeah.
You heard about it? Great. So what do you think about this kind of new approach?
Yeah, I think it's great. Reiki's a good friend of mine. He's
oh, seriously, great.
Yeah, he's right down the street here, actually. So I think that, I mean, I think it's great. I think crypto is a wonderful solution in general to this, to these, this problem of centralization of things. Seeds, I think, is a great, it's a wonderful mission. You get paid for doing things that are beneficial to society. I was on when he was talking. Actually, maybe it was a different channel, but he was talking about an hour ago.
Mm-hmm.
And, he said something to the effect that trees, like, you don't get paid for replanting trees. And I was going to interject, but you do actually, if you own the land. That's the thing, is that if it's a forest that's owned by the government, then no one owns it. If it's owned by everyone, it's owned by no one. So there's no one who takes responsibility. So people that are, in power for 2 years or 4 years while they're elected, or they're, appointed by the person elected, they'd say, okay, hey, you funded our campaign, Mr. and Mrs. Logging person. Yeah, come on in and just take all the trees out, because I don't care. I don't have the residual interest in that land. Just like you don't. So nobody has it. We're just going to take all the trees and then leave. But if you own the land, you care about how much it's worth after you ruin it. So, but anyway, so it's kind of an aside.
Right? You think that community ownership could be one of solutions, or you talk about just one person responsible for each segment?
Community ownership can work for sure. I mean, it's, as long as it's voluntary, everyone has their stake in it. But if it's government, I don't think that's community. I think that's by force.
Well, here I agree.
A lot of the government is us, and we vote for it. But it's to me, that's just something we learned in like 4th grade. In a government school, they taught us that the government is us, and so because we get a vote. But it's a very, very, very tiny check on a relatively mafia-like organization. So, but you can have, I mean, I don't know what the studies are. They can have maybe up to 150 people in a voluntary group that's without any written down rules that can kind of keep order. Yeah, so you can have co-ops and all kinds of ownership, but as long as it's voluntary rather than through force, the government being forced, then I think things tend to get taken care of because you care about it. The problem is with situations where there's no defined ownership. Look at what the classic example is the ocean. I mean, no one owns the ocean, so everyone has an incentive to just go into the ocean and take all the fish out that they can right away, because they don't have an interest in keeping it, keeping the supply available. But if you own a forest, you're not going to just like raise all the trees and get rid of it, because now you get the land that's decimated, and you want the value to be held up. And Sierra Club, I mean, is one of those cooperative entities. They buy land and then they just let it sit there because they think that's the best use for it. I mean, you could use it for. And the rainforest would not be ruined if the Amazon was owned by people voluntarily. It's that it's owned by government, and so the people that are cutting it down and planting things are just government favors. Right, yeah, you asked about Reiki and about seeds. I think seeds is great. I think it's interesting. I keep trying to get deeper into the details of it. Because I think there are a few things where the problems to be solved, I'm not clear that those are problems, but I do love the energy behind it. And I think it's trying to solve the right kind of things overall.
Yeah, it should start somewhere, right? So I really like this application too. But considering what you said before about community ownership and about particular number of people being located on this land, 150 you said, I actually completely agree with this, the home project. But we represented not just any land, but farm that is able to be self-sufficient. So just a network of community-owned regenerative farms with 150 people on it as a tool, as one of the way to regenerate our world, basically.
Yeah. As long as it's voluntary, people are working on it. Now, maybe it won't succeed, but that's the whole idea. You're supposed to be allowed to fail. Faz, did you want to say something? Oh, he's back to mute. You're back to muted. All right, let's get you out there.
Yeah, I muted myself again. Yeah, I just thought something when you were talking about that kind of ownership and sort of examples of in both cases where, so in the UK, a lot of land is privately owned and owned as farmland by farmers or owned by big estate holders. And that land being in private ownership is quite problematic for getting things done. So in terms of like reforesting and that kind of thing, because the way they see it, there's no value in them. Say you wanted to plant loads more trees, there's no value for them in turning their land into forested land. So it then makes it very difficult to enact large-scale reforestation projects because you have all these pockets of land that are owned by different people. But then on the other end, when you were talking about the seas, I remember watching a film I found really interesting where when they brought in the fishing quotas to try and reduce overfishing, and so a lot of the small-scale fishing businesses and independent fishing businesses, the allocation of the fishing quotas was done, I don't know exactly how they worked it out, but it was basically the size of your company. So the big fishing companies got huge fishing quotas and the small fishing companies got small fishing quotas. So they would go out and then their quota that they were given was like a fraction of what they would normally catch, but what they would normally catch was way smaller than what the larger fishing corporations and fishing companies would get. So then they were making less money because they couldn't catch as much fish. So they started to go out of business and started selling their fishing quotas to the bigger corporations. So the big fishing companies were getting bigger and bigger and bigger, and the smaller fishing companies were going out of business. So where there isn't, kind of what you were saying, where there isn't ownership and it's kind of publicly owned and therefore under the control of a larger body like the government. And then even when they start to bring in schemes that seemingly are meant to help a problem like overfishing, again, all it does is feed back into supporting the bigger corporations and the bigger companies that already have that hold on the market to just further increase their hold on the market and isn't actually doing anything to address the overfishing population. So it was just two kind of random examples that came to mind when you were talking about ownership of what essentially are public spaces.
So you're saying that the quotas got consolidated into bigger entities in the fishing case.
Yeah. Essentially, over time, because the quotas that the smaller companies were given weren't enough to support them anymore. And so then they end up going out of business and or selling their quotas to make enough money. And then the people that had the money to buy the quotas were the bigger companies because they had surplus free cash.
So did they overshoot their quotas, or did they still just fish as much as the quota was allowed?
Who?
The bigger company, like once they had all the quotas combined.
As far as I know, they fished to their quota, but their quotas were huge relative to the smaller entities.
Okay, but they bought the smaller ones, so they basically put them all together. So there wasn't more fish overall being taken out. Right?
No, I don't think so. But another interesting part of the film was that a lot of the small fishermen were saying that from their experience on the ground, there wasn't an overfishing problem. So their theory was that this was just another thing that was brought in to help consolidate those markets for the bigger players. Because the way they were seeing it was day to day, they were catching just as much. This is specifically like on the east coast of the United States, so it was one small section of the entire sea, but they weren't noticing any kind of shift in fish populations in their areas.
I mean, but the principle. So the principle maybe is more obviously applied to where you were talking about private ownership of land. So it's not to say that the best use of land, the highest value use, is always forests. So I don't know.
No. Well, that's why they won't forest their land, because they receive money for keeping it as essentially farmland, even if they're not farming. Whereas there's no incentive for them, no financial incentive for them to turn it into forested land. So
they're receiving money like in subsidy or something or they're receiving money.
Yeah, subsidies.
So it's a government. I mean, it's ownership, but then also you got to not have any subsidies. You get paid for what you produce, not for what the government tells you politically motivated. So I said, I mean, if the land is owned, but then you have subsidies, it's not really owned still. It's more regulated out of existence, the ownership. So I'd be interested to learn more about the fish example, because it seems to me that maybe they're, like you said, from their perspective, the smaller fishermen thought there were still enough fish, but maybe they were dwindling over time, and someone had some kind of a macro view on it. But government created property rights that are not naturally there are also prone to political corruption. So I'm not saying necessarily you should apply quotas. But like the cool thing about crypto, as opposed to gold, even though I definitely think gold's a good idea, is that you can't get rid of it again. We were on a gold standard, and then we went off it because the government just went crazy spending because they had this privilege of spending. But now they won't be able to if people are using, totally bottom-up solution, which is this digital money that we can just, you don't have to ask anyone for permission how to use it or anything like that. So.
Yeah.
But to me, it's ruining the lives of poor people to the greatest degree, and yet you have the poor people or average people are the ones that are clamoring for more government. It's the irony of things. Whereas they blame rich people for capitalism, but capitalism is what benefits the poor people. Cronyism is what benefits the rich people. It's just, it's run for the value of the benefit of wealthy people. Government is, because they get favors, they know people in high places, they fund campaigns systematically. I used to work in Congress in the US, and in this committee, I was there for 6 months, and every meeting except for 2 of them, all day the staff had was people that they're lobby groups. And the only other
Okay.
two are personal friends of the chairman that they grew up with. I mean, it's
Yeah.
not like me that has a great idea. We get to go
Wait
talk.
1 second.
Someone coming on?
No.
No. Okay.
Thank you guys so much. I need to leave. This is Nika speaking. Thank you so much. Thank you for your.
Thank you, Nika.
Thank you.
Thanks a lot. I think I'm going to sign off here too. But thanks for the conversation.
Yeah, you've done an extended session tonight.
Yeah, I guess so. We get an hour. I mean, it's better than a half hour. I looked at the schedule here. My name isn't even on there anymore. I don't know. The other person.
Yeah, I know. I was expecting something totally different.
Really?
Yeah, there was a different thing scheduled for this slot about
Really?
consciousness. Yeah, the age of consciousness.
That's crazy. I don't know.
So you weren't even on there, and you've done an hour. You've done well, mate.
Yeah. All right. Well, I guess you get a bunch of abundance. You get to use it.
Yeah. Well, good chatting to you, man. Thanks very much.
Likewise. All right. Thanks, guys.